The following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Okay, folks, this is Larry Pesavento setting in for John Logan. So we're looking good, feeling good this morning. The first chart I posted in here is about the stock market. As you can see, it's a New York Stock Exchange Index chart. We're sharply lower this morning. So far, that means it's going to gap down again, which will even make it even more bearish than it already looks, possibly. But we'll have to wait and see. I want to start the show today a little bit different because we lost one of our great human beings yesterday, Yogi Berra of the New York Yankees, the great catcher. Passed away at the age of 90. I was fortunate enough to meet him a couple of times, and believe me, he was really a nice fellow. I have to tell you, one of my favorite people in baseball is Vin Scully. He's the announcer for the Dodgers. He was with them in Brooklyn. He's been with the Dodgers for 67 years. And when I moved to California, Southern California, from San Luis Obispo back in 1966, I moved to Westlake Village. And the reason I moved there is because that's where Vin Scully lived. He still lives there. And after his wife passed away, about 20 years ago, he married Jerry West's secretary, Sandy. And they've had 3 boys, and he's doing pretty well at age 87. But he was interviewing Yogi Berra after one of the World Series games. And what happened was there was runners on second and third with 2 out in the bottom of the 9th inning. And so the Yankees were ahead by 1 run. And what happened was first base was open, and they hit a hard ground ball to the first baseman, who I will not name, except that he went to Purdue University in Indiana. And all the first baseman had to do was to step on the bag for the 3rd out. Well, instead of doing that, he spun around, made a 360-degree spin, and fired the ball into home plate. And there was Yogi waiting to catch the ball to tag the runner as he came in. At the end of the game, Vinny asked him, said, "Yogi, how in the world did you know to expect that guy to do that instead of stepping on the bag?" And Yogi said, "When you play with dummies, you got to think like dummies." And that's pretty much what he was about. He told it like it is. He was very smart. I mean, these little yogiisms that you hear, you know, they're true, but he was a very smart guy. You know, he managed partly helped manage the Mets in their 1969. He had 5 or 6 World Series championships with the Yankees, and he was just a really nice guy. So that was a really good time. And I have to tell you my favorite baseball story of all time. This goes back to 1988. And I was living, I moved up to San Luis Obispo when I left Commodity Corporation in late 85, early 86. And I had met a man and his son, Michael Weintraub, and his son Milton, and his father Milton, and they were furriers and jewelers in Santa Barbara and San Luis Obispo. And for some reason we became friends, and they did so many favors for me. When I started my business, writing my book Astro Cycles, you know, I didn't know anything about, you know, banking and credit cards or any of that stuff. And Milton told me to go to the bank, and the banker, you know, said, "Whatever you want." And then they gave me a $25,000 line of credit that I didn't even want. It turned out to be a good thing. But it was just, they just did everything for me. And they had 4 children. And Milton was a very wonderful grandfather. And we loved these kids. And it was just, I watched them grow up. I mean, I brought them home from the hospital. So it was fun. Anyway, it's 1988, and he grew up in Brooklyn. and we were having the World Series between Oakland and the Los Angeles Dodgers. It was a freeway series, and it was impossible to get the tickets. I mean, it was just there's only 56,000 seats at the Dodger Stadium. They could have filled it 3 times over. But on Friday morning, the game was Saturday. On Friday morning, Milton called me up at 6, and he said, hey, he said, I want to take the grandkids and you and Michael to the game tomorrow. And I said, yeah, that's good. I was hoping he had tickets. He says, can you get me tickets? And I said, I'll do my best. So I called my ticket broker. That was my first line of defense. And he said, are you kidding me? He said, I can get you 8 tickets. He said, but they're going to be all over the park. He said, you're not going to get 8 tickets together. It's impossible. So the next person I called was Tommy John, because Tommy John was playing for the Yankees now. He'd played for the Dodgers for 6 years, and we grew up together. We were really good buddies. In fact, I was with him the day he signed his contract with the Cleveland Indians, and for $60,000, which was more than Pete Rose got as a bonus. And we went to the Pontiac dealership in Terre Haute, and he bought a white Bonneville convertible. And so anyway, that's a long story. But anyway, I asked him, I said, Tom, he said, Larry, so I can get you 2 tickets. He said, but that's all I have. And he said, they're really, you can imagine how hard they are. Okay, so my third line of defense was Wes Parker, who played for the Dodgers during the era of Koufax and Drysdale and Maury Wills and Three Dog Willie. Oh God, what's Willie's last name? Oh, Willie Davis. And so it was really hard to get the tickets. And I called Wes up, and Wes was a broadcaster for Dodger baseball in Japan because it was very popular. And I called him and I said, Wes, I said, I really need 8 tickets for the game tonight or tomorrow night. And he laughed and he said, are you kidding me? And he said, you know how hard these tickets are to get? And I said, yeah, I do. And he says, well, he said, let me tell you something. You're lucky than a 3-peckered billy goat, he said, because I've got 8 tickets. All you got to do is to get me 4 golf spots at Pebble Beach, which is nearly impossible to do. And I said, give me a half an hour. And I called my buddy up in a 17-mile drive, Jack Valenti, who was a member of Cypress Point, and I told him what I needed. He said, no problem. He said, everybody that plays golf up here wants to go to that game, and there's a lot of open spots, so there's no problem on Saturday morning or Saturday afternoon getting, 4 spots. And he said, what we'll do is we'll set them up, play 2 rounds. We'll play Cypress Point, and what was the other one he wanted to play? I can't remember the other course. But anyway, it was really really something to have this done. Anyway, we got the tickets. We go down to the game, and we get there early like everybody did. And we were sitting right behind third base. I knew they would be fabulous tickets because these were Dodger tickets. And right in front of us, 2 rows in front of us, was Frank Sinatra and his wife, Barbara. Sitting directly behind us was Rob Reiner and Jerry Seinfeld. And there were several other actors around. Tim Conway was there. Penny Marshall was there. Henry Winkler was there. I mean, there were just a lot of, celebrities, but it was just a regular game. And it happened to be the game where wait. That's not the guy from the Screen Actors Guild. That's a different Jack Valenti, guys. That's not that same Jack Valenti. This is Jack Valenti, who owns a string of pharmacies up in the Monterey Bay area, who I'd known for many, many years, and I'm still good friends with him. But he's the one that got me the tickets. He's an avid golfer, and he's the one that belonged to that. It's a different one. It would have been nice to know that other Jack Valenti, too. But anyway, it was a game where in the bottom of the 9th inning, the Dodgers were losing 4-2, and there were 2 men on, and they brought out Kirk Gibson to pinch hit, and he was really hurting. He was on the disabled list right before that. He hobbled out. You could see he was in a great deal of pain. Well, anyway, he hit the home run of home runs, the greatest home run in Dodger history, without a doubt. And the place went absolutely nuts. We were still yelling and screaming 45 minutes after the game. They finally were flashing the stadium lights to get us out of there. but it was the most exciting night you could ever ask for with an ending like that. It was really, really spectacular. But that was there that night. That was October the 15th of 1988, and the Dodgers went on to win the World Series, and that was it. Okay, let's talk about the World Series of stocks. They're under a little pressure today. Whether we're going to end that down that way or not, I don't know. We're getting down to pretty close to some pretty major support here in the S&P futures. That would be right around 1900, 1899, somewhere in that ballpark. And we'll see if that holds. Now, the New York Stock Exchange Index actually closed on the 61% retracement, as you can see from the chart that I posted in here this morning. And so we'll see if we're going to see if that's going to hold or not. We'll have to just wait and see what's going on. Now, I wanted to switch over a little bit to gold and silver because we have a really big divergence here in gold and silver. The gold has gone up and made the 786 of the high that we made back at 1143. We went up to 1137 and backed off a little bit, but silver is not even rallying at all. I mean, you talk about a dead cat bounce. There's nothing in there that makes this thing look like it's going to do anything at all. It's just really under a great deal of trouble. So I just don't know if it's going to catch up or not, but we'll have to wait and see. If we can get gold above 1140, then it's got a pretty good chance, of a pretty good run, and then we'll be able to, see where we are. But we do have, oh, by the way, the cattle trade was an absolute disaster. Well, not a disaster. I mean, we tried and we lost. That's basically it. And we have to blame it on somebody. So we'll blame it on Rich Anderson, which we can't do, of course. But we will put this up here, and you'll see that the October cattle hit our buy point down there at 34.60, and it went below that and actually closed limit down. So there were limit sellers, and that, in other words, there were 1,000 people long the contracts that were trying to get out. So that means it's most probably going to open lower. I don't know where the bottom will be, but it certainly won't be in this area around here. At least I don't believe so. So we'll see if that's going to happen. These patterns, they only work part of the time, unfortunately. But fortunately for us, because if they worked all the time, everyone would see it and be self-fulfilling prophecy. And that's not what this is about. It's about probabilities and risk control. And risk control comes in more importantly than anything else, because you can't risk everything that you have on any one trade, because that will be the one that buries you. You just can't do that. It's a series of winning trades that'll get you to the promised land. Got to take a break here. 877-927-6648.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay. Okay, we're back, and we had a question from Tammy in Reno, Nevada about this. We have this lunar eclipse coming here this Sunday, the 27th, and if you'll just give me a second to put this in here, this is a rare lunar eclipse because it also comes at a time where we have a super full moon, and that means that the Earth is as near as it gets to perigee. If you get a chance, go into Google the super full moon, and you'll see some really great animated pictures of what this thing looks like and how the harmony and how they move around in ellipses and how the dates are, so spot on. It's really interesting to watch how it unfolds and how it moves from apogee, which is as close to the Earth as the moon gets, to perigee. Apogee is as far as it gets to the moon, and perigee is as close as it gets to the moon. It shows that as it goes in its elliptical orbit. But this particular time, we only see this every 30 years. It's a very, very big cycle, and we'll see what's happening. That's part of that cycle, that Shemitah that we talked about, the Hebrew cycle. But whether that's going to have any effect or not, we don't know. But we are down a little bit in stocks today. We've broken some support, but again, we have some other support coming in right behind it. With this market down sharply, right after the opening, the odds of a rally are pretty good. That's what usually happens. A blue moon is nothing more. Oh, that's a blood moon. A blood moon is, I thought you said blue moon, Terry. I'm sorry, but a blue moon is nothing more than 2 full moons in the same month. That happens every 18 months. And a blood moon is a super full moon, but is turning orangish color, and that's due for the hues of the atmosphere. That was a blood moon was also, mentioned in the Bible, because a lot of these cycles are in the Bible. As a matter of fact, we just finished the High Holy Days yesterday between Rosh Hashanah or Yom Kippur in the Hebrew faith, and that's based on an 8-day lunar cycle. So we'll find out whether these other ones are going to come into play. But the 27th is interesting because we had the same type of scenario back in 1987. I don't remember. It wasn't a full moon, a super full moon. The super full moon occurred on July 6th of 87. But then the other one that we had, the lunar eclipse in August of that year, occurred right after that time when the market was rallying up into October. As I remember, we bottomed on the 25th, I believe, of September, rallied into October the 6th. It was the 4th, 5th, or 6th that we had a Venus-Uranus conjunction there, I believe, and then, boy, all hell broke loose. It dropped 33%, in a matter of a very, very short time. So, that's the main thing that we're watching here. We've got a couple of other trading ideas, and remember, this is one from the person that gave you that wonderful cattle information that didn't turn out that well. But this one is going to take a little bit longer to unfold, I believe, and that is in the currency. It's the Canadian dollar versus the U.S. dollar. And we're very, very close. We're right now, the market's trading at 133.80, and we're looking at about 30 pips higher than that. But the way to handle this, frankly, is to let the top come in, let it react, and then we'll sell the first Gartley back. You don't have to try to be a hero and pick the top in this thing, which I don't think is a good thing to try to do anyway. But that's all I can say, is that I would wait to do that. That's going to be my strategy, is I'm going to wait till it reaches the top, let it break, and you're always going to get a, not always, but most of the time, you're going to get that Gartley pattern on the way back, and that's the easiest way to do it. If you want to try to be a hero, and I'm not recommending this, the number to watch is 134.35. That's about... how many pips is that? That's 30. It's 50 pips, a little less than 50 pips from where we are right now. And you don't want to risk more than 30 or 40 pips on that, because if that doesn't hold it, the next number up there is 136, another $1,500, and the market's moving pretty fast. I actually bought this last night. Or actually sold it. We bought it on futures, sold it on the Canadian versus the U.S., and it's already made 70 pips, and we're out of it now. But this market was trending so strongly, it almost had to get up there. Okay, we're going to take a little break here. We'll come back. We're going to talk about the bonds and the wheat and some other things.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we're talking about the stock market and also mentioning that we have this lunar eclipse and new moon. So let's try it again. Lunar eclipse and full moon coming in on Sunday the 27th, which would have been Mark Douglas's 67th birthday. Unfortunately, he missed it by about 10 days, but that's the way it goes. Okay, the next chart that I posted in here is the breadth of the market from John Murphy and stock charts. Basically, it shows the advance decline line, how the advances have stopped going and declines have taken up. And you notice the far right, you'll see these 2 red arrows there. One shows the acceleration of the volume on the advance decline line on the downside, and the second one that shows that the new highs to new lows continues to deteriorate. It actually started to accelerate again yesterday, so the market is getting actually weaker and weaker, if that's possible. I look at this and I said, my God, I don't understand how it can even be this high, but that's neither here nor there. That's what they're seeing anyway. So anyway, this is what it looks like. It looks very, very bearish on any of the indices that you could possibly pick up. it's just one of those things that tells you that, by golly, for some reason, these things are rolling over. We've had a breakdown in China to some respect, because they've been going down for 18 months. Commodity prices have been going down for 18 months, and frankly, I think they're still going down. I posted a chart of platinum into the room this morning, and as you can see, platinum made a newer low on Tuesday, and off that little butterfly pattern, it's rallied a little bit, but it went down much farther than the gold did. It made a newer low when gold didn't, which gives the gold a little bit of extra credence for some bullishness. All we need for gold is to get it above the 1145 level, 1147. It will. I think you've got a real shot to take out 1210, because the 1170, I don't think there'll be any resistance at all. But that's just my opinion, of course, and we know that opinions are like armpits. Everybody has one, and it usually smells. So just remember that it's just an opinion. You have to make your own decisions, take your own responsibility, and that's what you have to do. No matter how else you want to do it, there's nothing else you can do when you're doing this. Remember, our volatility here is not anywhere near where it was years ago. Back in 07 and 08, we're only running at about 15% of that volatility, and even the VIX index has done very little during this last week. On the downside, it's bounced a little. We'll wait to listen to see what Basil Chapman says, because he's the expert when it comes to this. So, but there's no fear in the market. As we mentioned on our show Monday, we had a chart from Ed Carlson from Seattle Technicians Association that showed that 49% of the people didn't do anything at all into August the 24th, and maybe that was the right thing to do, but at least they didn't do anything. They weren't afraid of anything. I think the fear is coming. It just hasn't hit as yet. That's the bottom line of what I'm looking at. Now, one of the things that works like a fear mechanism is the bond market, because there is somewhat of a flight to quality, if there is such a thing, in the bond market. Because if we take a look here, this is a half-hour chart of the 30-year bond going back the last 5 weeks, and as you can see, we are heading up towards that 157 level. Right now we're just above the 156 and change level, and I believe we're going to get to probably 157.26 either today or tomorrow, especially if the market continues to sell off. There'll be some flight to quality, and then you'll notice on this chart you would have a double ABCD pattern. You have the ABCD pattern from the 20th to the 24th, and then you have the ABCD pattern from the 16th to the 24th. And I'm not saying the 24th is going to be it, but we've got we have Friday tomorrow, so it's going to be an interesting Friday, as all Fridays are, because they're followed by Thursday, or they follow Thursday, and then guess what? Before that, they're one day ahead of Saturday. You think I don't know astrology? Give me a break. Okay. Anyway, we're looking at 157.26 in the Treasury bonds. That's what I think the target will be on this move. It's a 61% retracement of the high we made back in September, or in early September. Excuse me, that was August the 24th during the panic. And as you can see, after that, they dropped 10 handles and now are bouncing back. So there's really no fear, and this is going to be interesting to see if they make this number. Coming into this time frame, because we should be getting ready to bottom in the stock market, most probably either Friday or probably Monday, because of the fact that we have this lunar eclipse and the full moon at that time. I would think Monday would be the logical time for a bottom, and it could be a very, very dramatic one, but that would be a spot that I would be watching for that. Now, if you remember the chart that I posted from Victoria Martin that showed the distance between the new moon and the full moon into the lunar eclipse, in 1987 that was going up. This time it's coming down. So there's going to be a different reaction at that point. So we want to just watch to see what's going to happen, on the 27th to see what type of what the type of move you're looking at. But I don't think this market is going to bottom before October 10th. October 10th is a key date out there. It's a very strong date for astrological people that follow Bradley and stuff like that. But it's also the work of some other people that do these things that tell us that the geometry between these planets are also fitting in with what we're seeing in the stock market. So October 10th will be a key trading date in the market, and that's where, if we're coming down into that one, then I would think we would be looking at something of a pretty good bottom to come from. The more I look at this, we'll see what happens in some of these things. So we'll see what's going on. But we've got the New York Stock Exchange Index closed right at the 61% retracement. I was listening to a fellow on Bloomberg yesterday talking about how bullish that was. I looked at that chart and I said, I do not know what this man is looking at. And I looked at some other stock and I said, I just don't see it. And when I look at the thing this morning again, I still didn't see it. It just looks like it wants to go down. We'll see what's happening, and we'll see what's going on. So we'll see. Okay. Fact is, I have been so consumed with these stock indices over the during the trading at night, because you have such tremendous move. Hell, we had a 70-point move in the Nasdaq last night, a 35-point move in the S&P, and we used to get a range of 8 or 10. Now we're getting 4 or 5 times that every night. But the big one was the DAX. The DAX moved 300 points from high to low, and continue to go down. So that was the bigger one, and that DAX is that's 10 times the volatility of the E-mini S&P, because it has a value of $2,500 for 100 points, and it trades in 20,000 euros as one contract. So it's a big daddy rabbit, as they say in the trading game. But it trades really nicely off the fib numbers. Follows the patterns nicely, and it has to, because you've got the public in there, and if the public's in there, these charts are going to act all the same. They're not going to ever be any different. It's just a natural law of what we're watching. So we'll keep an eye on the DAX, but it's broken down badly again. After we had that little bit of a bounce the other day. From that area. Now, I had a request to do a chart for Baidu, and I know I did it. The $95 question is, where do I find? There, I found the chart for Baidu. This is good. This will show you one of John Logan's favorite sayings, and that is, prices of stocks that are lower tend to go lower, and prices of stocks that are higher tend to go higher. As you can see this, from the August 24th bottom, the market rallied for 3 days and then came down for another week and a half, 2 weeks. So you got to look at each stock separately. Look at Nike. I mean, that thing is right near its high. And that's been a very, very strong stock. Others are not doing that well. But you got to remember, it's a market for stocks, not a stock market. So you've got to remember that. Watch each stock separately, and if you trade just one stock, put all your stocks in one basket. Just watch that basket. That's what you've got to do. It's a very, very important, very, very important thing to look at, as near as I could tell. So we'll see what's going on. We have a time here to talk about the grain markets. We went up to that 505 level in the Christmas wheat. We got as high as 508. We're looking for 511 to 515 as a possible area of resistance. Corn has also bounced a little bit, and beans have bounced a little bit, but very, very little. I mean, they're not acting very bullish at all, given the fact that we've had a pretty good bounce in some of these other things. Now, copper, I don't know if you folks have been following copper, but copper gave back all of its gains. It rallied 12%. It rallied from 228 a pound all the way up to 246 a pound, and now back trading at around 230 per pound. So it gave all of that back. That's not a very good sign also. And the other thing is that you look at the Nikkei index has been down almost all week. The Chinese market, you never know where that's going to go, but I believe it was unchanged, up slightly today. I'm not to know what the final was. The Hang Seng was down a little bit, so we're starting to see worldwide, and the DAX was down a lot. FTSE was down, so we're starting to see some capitulated selling across some of these emerging markets and things like that. It reminds me of one of those something wicked this way comes. I don't know where it's going to come from, but there's something out there that's going to be it's going to be an outlier event, would be my guess, that you're going to wake up some morning and you're going to realize that there's been a change in the continuity of economic thought. That was something that Paul Samuelson used to talk about. He used to come down to Indiana University and give us a talk. He was a friend of Charles Schultz at that time. He was our what did he do there? I think he wasn't the dean of the school, but he had something to do with the school at that time. And anyway, he always talked about that if a person would just go short one contract of soybeans, that's equivalent to 1 year of business school. Graduate school in business if you shorted soybeans. He said that tells you everything you want to know about supply demand, tells you what you want to know about fear, it tells you what you want to know about money management. And but he was really big on futures trading, and he was always an interesting lecturer. Okay, one other question about Apple. I've covered that darn stock so many times. I don't know if I have the stock to even post it, but we did go up within a penny or two of hitting the exact 61% retracement on this last rally up, but we didn't get that far at all. I wanted to just to show you how weak the silver market is, folks, compared to the gold market, because the gold market, we've rallied back almost to take out the highs, and we have only gotten to about 1490. We're far, but we should be trading around 1505 in the silver, and we're not even anywhere close to that. So we'll see if that is going to be any type of a case, and we'll see what happens. Okay. All right, we have one other question here is about the cattle trade. Why it didn't work. I don't. Here, I'll put the Apple chart up. Everybody's screaming at me to do the Apple chart, and here we'll put the Apple chart up. This stocks get more free. It gets more free advertising than all the stocks combined. I mean, I've never seen a company that gets this much free advertising. It reminds me of when we had the old Xerox, with their copying and Eastman Kodak. They used to get a lot of free stuff, but that's Janet Yellen calling me again. Tell her I'll call her back, would you? Okay, we'll have to talk to Janet a little bit later. We're going to see if she's speaking in Amherst University. Oh, that's where my friend Byron Tucker went to school at Amherst. That's where Dan Brown, the guy that wrote the Da Vinci Code, was from there. He and Byron were in the same class. Okay, we'll take a little break here, come back, and then wrap it up.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge Heard Daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Okay, we're back, folks, and I believe we have Janet Yellen on the phone. Janet, are you there?
This is not Janet, but it's Maria from New York.
You know, I was hoping that with you. I told her to put her on hold. So how are you, Maria?
I'm good, and you?
I am good. I am good.
It is good to hear you. Listen, I wanted to just quickly ask you a question about the Nasdaq. If I look at the 4-hour chart, We're right on the retracement from the highs that we had a while ago. I remember it was June to the lows in August. We're right on the 61.8 retracement point. So, do you think we should have a reaction there, or do you think we're going through?
We certainly should. That number in the S&P futures comes in at 1900. And we're very, very close to it in the NASDAQ, too. I believe the NASDAQ is 10 points away, but, it's still very, very close. And with the market opening down sharply, usually there's buying coming in because people looking for value. My guess is we're probably going to get a bounce, would be my guess. But that should be some really strong support. The problem, Maria, is that the overall market, the New York Stock Exchange index chart, that closed on the 61% retracement last night, and it's going to gap down. So it's going to have to stop at the 786. Otherwise, we're eventually going to take out the August 24th low. I don't think that's I don't see how we're not going to do that given how bearish the market looks. But like you say, we could get a bounce in here at any time.
Yeah, because in fact it's holding in a sense pretty well. If you look at the DAX, it touched the August low this morning. If you look at the FTSE, it's in the last bar. We start touching the lows. If you look at the CAC 40, it's the same. So I think relatively the U.S. market is holding pretty well.
They're trying to hold. That's exactly what they're doing. No question about it.
Okay, thank you very much, Larry. Always good to talk to you.
Thank you for calling in, Maria. I appreciate your call. You bet. Bye-bye.
Take care. Bye.
Okay. Well, we had Janet on the other line, but evidently she got called away to make a decision of some kind. So we'll move along. Folks, watch the close today, because if we close really badly, this could be the breakdown of something really serious. Looking at that New York Stock Exchange index chart, it is certainly very, 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 very bearish. No matter how you look at it. So keep that in mind. Remember, the bonds have a pretty strong target up there around 157. So kind of watch that. If you see the bonds up in that 157.15 area, that'll probably be it, and that could be where the market, finally makes its turn, to see if it's going to, move to the downside or not. But we do have a situation. I've got to do another hour here, don't I? Where am I going to come up with some information? I have to repeat a lot of this, but I guess that's good anyway. So we'll see what's going on. So far, we've that Canadian dollar that we talked about, we're getting very, very close to that 134.40 level. That's where you, if you have an inkling, that's where the inkling should be looking at it, because that's a lot of numbers up in that area. We're still 27, we're 27 pips away yet, but we should get up there without any trouble at all. But whether it'll stop at that point remains to be seen. I said the best way to handle this, of course, would be to take the move the, let's try it again, Larry, is to wait till the market makes a top and then sells off, and sell the first rally back would be the thing to look at. So 877-927-6648. Thank you for joining me. Live every day in an attitude of gratitude, and may God bless. And John Logan will be back with us on Monday. Thank God.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.